Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Mark Marex, product development specialist with Nasdaq Index Research, joins me this afternoon to review Nasdaq 100 pricing trends. Mark, it's great to see you as always. Welcome back to Trade Talks. And let's take a look at our first chart here, examining relative strength.
Thanks, Jill. Great to be back, and I think it's a good time to be talking technicals right as we get into the heart of earnings season for these tech companies. Looking at relative strength, this is a 14-day relative strength index measuring kind of positive or negative momentum for the Nasdaq 100, the NDX. You can see where I've highlighted there in the red. We were reaching kind of stratospheric levels at almost 80. Anything above 70 is considered highly bullish in terms of this index. We were at almost 80 late in the summer, late August. Then we had that first pullback early September, bit of a recovery, a new pullback that kind of accelerated this week. Today we're up a good amount, but that has brought down the RSI to about 40. Anything under 30 is considered heavily bearish. So we're not quite in like a bear market stage yet, but certainly moving in that direction, it seems.
And Mark, you have a couple charts here on the moving averages, short and long term. Let's look first at the short term moving averages. Anything of note there?
Yeah, so these are interesting. They tell you kind of two different stories, right? In terms of the 20-day, the purple line, you can see that the index was bouncing off of that line for the better part of 6 months again, and then early September with that first initial pullback, blew right through short-term price support on that 20-day moving average, bounced off of the 50-day a couple times, but ultimately couldn't hold that and has just recently blown through both of those levels. So tough to kind of say that in the near term we're going to be rebounding back above these. I expect that any rebound that started today and maybe persists through the end of the day will be rather short-lived, and that kind of gives us a segue into the longer averages on the next slide.
Right. And if we take a look at that next slide with the longer term moving averages, you're looking at that to discern more of a trend.
Yeah. So here we're looking at 100-day and 200-day moving averages. You can see we were really nowhere close to breaching any of these for a very long time. And this is all as of yesterday's close, right? So yesterday we closed just above the 100-day moving average, pretty much right at it. Today we're having a bit of a bounce. That to me says that's the real key support level, right around 11,000 going into the election probably. We're not getting stimulus, right? The Senate's adjourned till after the election, so there won't be much help from the government in terms of stimulating the stock market. For the Nasdaq 100, we've got the big earnings coming up later today, and then the rest of tech earnings next week and the week after. So that's probably the main catalyst to keep us above 11,000. But if there are some disappointments there, that's when you got to look at the 10,000 level for the next key support area on that 200-day moving average.
Yeah, especially with expectations high for those companies. And Mark, your last chart, I think this one's really interesting. It provides some insight into where investors are allocating resources.
Yeah, so this is just looking at Bloomberg's classification of sector ETFs in the U.S., U.S. listed only. You can see on the right-hand side, the first 3 quarters of the year, there's tech and there's everything else. And the Qs, right, the ETF that tracks the Nasdaq 100 index was a little over 17 billion of that 26 billion of year-to-date flows through end of September. You can see the story is completely reversed this month. We're going to close negative probably for the month in terms of tech flows. Again, most of that $1.5 billion loss is the Qs. Healthcare also reverting negative after being strong most of the year. And there you can see some of the weakest sectors, real estate, materials, industrials, actually grabbing the flows this month as people are trying to maybe revert to more of a value cyclical play. Remains to be seen if that turns into a longer term trend or not.
All right, Mark, appreciate the insight. Thanks for joining us on Trade Talks.
Great to be here as always. Thanks, Jill.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.